Welcome to Invest. We'll talk about investing, finance, and professionalism. It's the current time of 9:23 a.m. on Eastern Time on March 18th on Saturday. Hope you guys have a good weekend. And also, this week has been quite crazy, as you know. So hopefully, you guys had a good time digesting, but also now take a breather as we close the market yesterday and going on to the weekend. With respect to Saturday so far, seems like across the crypto market is relatively pumping, which is a good thing or a bad thing, depending on how you want to think about it. But with respect to the technical front, on a high level, we are reaching to a next level of resistance, which is 1850. And the overall crypto market is kind of mixed back. However, on the equity market, we also closed on a relatively negative note. Dow Jones was down about 400 basis point, closing on a relatively depressing week for the week that closed. And with respect to the technical front, we could just like to take a look at this on a high level perspective. It seems like right now we have had the sell off, which, the crash was mainly due to the debacle from the SVB situation, which, with a short liquidation event causing, a sizable sell off. But on a technical front, you could see that it has been forming a downward wedge, right? A downward wedge, as you squeeze tighter and tighter and tighter, you will eventually elevate back up, which is what happened. And also, we are experiencing some sort of anti-correlation effects between the relationship of crypto versus equity. And us, especially on the financial sector, looking at the news front, right? You could see that across the spectrum, the market obviously closed on a negative note, but it's mainly driven by First Republic and other regional banks, right? We know that SVB has already, been closed down, even though like they revive up, but obviously the reputational damage that the company has is already quite, tempting. And it's interesting that I was invited to have dinner, by the two banks, respectively, First Republic and SVB, a month ago before the whole crash. And I just had my first dinner with First Republic yesterday, and seems like they're optimistic, right? The rescue plan from JP Morgan and Bank of America allow the company to survive, but is it really sufficient to, revive? Or is it, the banking system is ultimately a more of a reputational play. From that scare, did that kind of freak everybody out, that drive everybody to shift away onto other bigger banks? Like they would rather go to a JP Morgan or Bank of America. Even Credit Suisse, which historically had a relatively, gold-plated reputation, is also in risk, right? So obviously, as you can see, on front page on CNBC right now, it seems like, BlackRock denies the reports that prepare to take over Credit Suisse. Like, it seems like Credit Suisse is like on the verge of being sold or just like collapsing altogether. Um, we will see, right? And ultimately, what we have to understand is like, how is the Fed's going to be doing this going forward? Are they going to be raising the rates? Are they not going to be raising the rates? Are we going to stay in the moderate level? Well, are we going to be a little bit more aggressive, like what Jerome has mentioned last time? It seems like with respect to the news front, it is saying that we're poised to approve for a quarter point by next week, but who knows really what is happening. So we will see as we approach closer and closer and closer to the FOMC meeting next week. Okay, so across the spectrum, you could see that it's still being like, driven by the negative financial sector activities, closing on a 400 basis point lower on Friday. And as First Republic, still relatively damped. It was down what? Holy Jesus, 32%? Is that right? That sounds like quite just wow, crazy. I mean, I think the company was trading at what, like $30? Uh, like yeah, like the I would say on Thursday, ever since the sell off from it's like trading around like $100, and it flew off the cliff by 75%, and then now it seems like there's more correction. So it is in a dire situation, but ultimately, It seems like JP Morgan and Bank of America are rescued, you know, to keep the company just alive. But in terms of like the outflow of the deposits, you know, flowing to other banks, it obviously shrinks the company, and also the reputational damage might actually not be. It might take a lot of time for us to come back, for it to come back, knowing the fact that you could you know, it takes a long time to build your reputation, right? But it takes a blink of a second, just by one mistake, one pimple, if you may, on your face, to really push you out of that picture completely, reputationally, obviously. And especially banking system is all about trust, the mantra of protection and risk management. So now they're losing that, it's just it's not a good look, obviously, right? So let's just dive into a technical without wasting more time. Respect to recording time of again 9:29 a.m. on Eastern time. We are at 18:25. So just a hair below of 1850. With respect to the technical front, we are quite extended on a daily. You can see that on the MACD chart, we are leap, leap, up and away, looking like a rocket ship. But with respect to the technical front, on the resistance level front, we are at the 70 out of 70. So we are quite extended right now. So buying at this level, the risk is actually quite high. So something to be aware of. And with respect to the weekly front, you could see that we have this mega green candle because of the collective 3 days pump of the anti-correlation effects that crypto has with equity, right? So at the 55 out of 70 with large separation, this is a relatively bullish signal. It's just basically a translation of a downward wedge translating to an upward pump from here, okay? And then on the monthly, you could see that we are still like, you know, flat as a pancake. We are still looking to rebound. So it's all good. You know, it's just a matter of, you know, the reversal is not there yet because we still need to kind of fix the weekly right now, right? The daily is extended, so we need to cross down before we cross up again, right? So what that really means is that we need to sell off. You know, in the meantime, and you know, on a short-term perspective, until we should ideally see some rebound by Q3, late Q2 to Q3. In respect to Bitcoin, you can see that we're also very extended on the daily. You can see that we're 73 out of 70, even more extended than with Ethereum, unfortunately. And also on the weekly, you can see that the downward wedge translates into an upward surge, right? With a 63 out of 70 as well, large wedge separation. The monthly, it is looking to glide and eventually rebound. But in the short term perspective, again, right, some sell off will just be normal, right? Because like this is a very, very long surge of elongation. We have basically accumulated $10,000 onto the Bitcoin pricing, which is great, but like, you know, it might be a little bit too quick, and this is mainly due to the safe haven effect. Again, right, people fleeing away from the financial sector to something that is directly the opposite of the financial sectors or the banks, which is crypto, to decentralize the finance system, right? So it's a more of a short-term affectation, and ultimately you're betting on the failure of the U.S. Financial sector for a direct translation into an upward surge of the crypto market. Okay, and then on the equity side, you can see that obviously we sold off, but we closed on the 391 mark. Daily, it is looking like we still have some more room to go down to based on the resistance level that we're at right now. On the weekly, you are unfortunately about to form a death cross, so that means seeing lower level is actually more prominent than going up from here. So it is very clear. You see that this cross section down, which translates into a lower level for the equity market as the financial sector market to continue to drive it down, which is not going to be a surprise for us, right? And then on the last but not least, the monthly, it is looking like we will have to come down a little bit to 44. So that means seeing lower level to ideally somewhere around like 370 to all the way to 350 on the SPY front would not be a surprise for us. Okay. So as a quicker one than usual, well, not really quick, it's 9 minutes in. So, but let me know if you have any questions in the meantime. Sorry for really missing our beats. It's been just quite crazy on a day-to-day basis. And it's unfortunate, you know, how how busy I am, and I wish my energy, my sanity level can be maintained to do this more often. But obviously, sometimes logistically it just it doesn't work out for me, so it's unfortunate. But I appreciate you for hopping on a call. But let me know how it works. And let me know how I can help. So take care.